Hey Syndicate members, Akil here once again. I've got a few trading setups that were on my radar. Actually, looking through my 4-hour portfolio, multiple pairs on my radar, but I'm going to give you two today that are both interesting and close to completion, I guess. This first one I'm looking at pound dollar, and it's a little different from what we usually do. A lot of the time, Jason and I talk about advanced patterns. I'm actually going to give you a structure-based trade, similar to something that I know I like to do on in the live room on the lower time frames. First of all, here's what we're looking at: big picture of pound dollar in the daily chart. We had a bat pattern complete here, probably a month ago. Up at what was it, 61.90s? I think it was 61.90. You can see since it's gave us a little pain, but has rolled over about 350 pips. Probably still involved in this, maybe, if you have trail stops, depending on where you placed your targets at. But I wanted to look at this bigger picture because the first thing I like to do is figure out where the market wants to go. And just looking at structure, you can see where churning down, lower highs, lower lows, lower highs, lower lows. The question is, where would I expect to go next? And you can see if you look left at structure, bang, I think we're going to hit this level right here, our B leg of our bat pattern. Also, if we bring in some Fibonacci points, we'll see that, boom, we have a 618 retracement right there from our last swing. So there's a good chance that if this market continues down, this is where we're going to go. Now, of course, you see, we also broken most recent structure right here. So what I'm expecting is broken and closed below most recent structure, I should say. I'm expecting the market comes back up into the structure level, giving us a trend continuation type trade, and be looking for a chance to hop on board and take this down maybe 200 pips to this 618 level. Now, if we go down to our trading time frame, or our lower time frame, the 4-hour, give you a little clearer picture of this. We have this little dip in structure right here, but really I'd be looking for the market to come back right up into these lows right here. You can see the market based here, touched it, retraced, tested it again, even tested it one more time and broke through. So a good test area at this level, and this basically came in at the same level as well. But also, if I bring in my Fibonacci tool, we're going to see this. Let's say I bring it from the last swing high to swing low. We're going to see a 618 retracement right there as well. And even if I bring in, let's try this one. Swing high to swing low, yep, we'll have a 382. And if I want to get fancy, and Jason talked about this, I think last week in the private client group meeting, not the best example, but I could even take a Fibonacci inversion from our last move in here, bring that up, and get a 1414 inversion right in the middle. Either way, we have a Fibonacci cluster right here, 1414 inversion, 382 retracement, 618 retracement, right at a structure level, looking at the perfect opportunity for a trend continuation trade. So going back to our IPDE, we identified it, we predicted where the market's likely to go. Next, you have to decide, hey, what am I going to do when the market reaches this point? Am I going to get involved in a limit order? Am I going to put a limit order right here at 59.60? Stops above here. Still getting a good risk reward, even if you're just shooting for initial targets as a retest. You see we have a 1-to-1. Or I'm going to wait there and use one of my other entry rules, as always, 3-bar reversal technique. Break below, close below. I can wait for a double top. The key is that you know in advance what you want to do. Therefore, when the market gets there, you're not scared, you're not nervous, you're not thinking, oh my God, it's here, what do I do? You already have a game plan in motion, and all you have to do is the E part, execute it. So IPDE, identify, predict, decide, execute. Now, once again, if we're looking for targets, the safest place for targets is going to be above our structure level here, above this 618 retracement. So getting targets above 60.43. Conservative targets will be at a retest of our lows here, 58.27, similar to 26.18. Extended targets, well, again, talked about this earlier. Where is the market most likely to go? Down to this 618 retracement. So extended targets can be all the way down at 56 or 57. 5750s, to play it safe. Let's see, maybe I have a ABCD pattern there if we get up there. Yeah, we'll have an ABCD pattern there too, and then who knows, we'll have a chance for maybe a reversal, a counter trend trade as well. Let me just see this. Yeah, so we may have a counter trend opportunity down there as well. Now next I want to look at dollar Swiss. And you can see we've had a good run on dollar Swiss as of late. We've had the butterfly pattern complete. Many of you, again, just like a pound dollar, may still be in this. Now, if you remember from last week, we also had a cipher in here. So I mentioned that, hey, you might want to take first targets off early. First targets, you usually get this 382 down here, around 97 or 93, 97. We had a cipher complete somewhere up in this area, which actually rolled up for both targets. So I advise that you might want to get at least one of your butterfly targets off the board, move stops to break even. And you can see cipher completed. We've rolled right back down with our butterfly. Now next we have something else forming as well here. And a pattern that I'm not too big on, but we actually have a potential butterfly pattern. And again, the way I look for my zone is not necessarily an ABCD completion, but I'll draw it out first. We have our X here. X to A to B, coming into a 786, B to C, looking for a CD completion. That's going to be somewhere right around this 618 retracement. And again, the way I'll do it is I'll take a Fibonacci inversion from my A leg back to my X leg and back up, look for the 127, and I'll take a Fibonacci extension from my A leg down to my B leg, look back up, and look for the 1618. So, and again, just like pound dollar, we have a nice little Fibonacci cluster. We have our 127, we have our 1618, we have a 618 retracement from our full butterfly move up. If I take one more Fibonacci retracement from this last impulse leg, let's see something. Yep, you'll see I get a 786 there as well. So even if you're not high on butterfly patterns like myself, when you have an area like this where we have what 1, 2, 3, 4 Fibonacci points within about a 15 pip zone on the 4-hour chart, well, this is a good area where you can bring your eyes and say, hey, there's a good likelihood that the market could reverse down here. Go down to a higher time frame. You can look left, draw a line in here, see if there's any structure that lines up. You call it. But again, identify, start predicting where the market's likely to go, and then ask yourself, hey, if the market does come down here, am I going to get involved? And if so, how? Let me just draw one more thing. It looks like we may have a Fibonacci extension as well if I go from the little move we just put in right now. Yeah, all right, let's add one more. Add another 1618 extension as well from this smaller move inside here. So there you have it. Pound dollar, structure-based trading opportunity, and then dollar Swiss advanced pattern / CTS type trade. Now, as always, right here, you want to, if you're entering this trade, stops, you want to consult to your rules on butterfly patterns. I'll tell you this: safest place is going to be below this structure. So safest place is going to be right here, probably under 92.54s. Just eyeballing it, which means you're looking at a risk of about this much. Which also means, assuming you have a rule that says, hey, I need at least 1-to-1, you need to be shooting for a reward of at least the same, which will easily get you back up into the B leg. So, all right, traders, if anything else comes up on my radar, I'll do another video or do another post. And if not, happy Thanksgiving, and I'll see you next week.